Hi guys, and welcome back to Inside Effects. If you've been following us on social media, in particularly Telegram, you'll know that we've had a really great week in the markets. Near enough every one of our calls has come through to absolute perfection. I mean, you can go check it out for yourself. You can find our link on Instagram, and also we'll put the Telegram link at the bottom in the description of this video. But yeah, we've had a really great week, and so to kind of celebrate that, we just wanted to make a video for you guys breaking down one of my personal favorite pairs, which is Usdjpy. Now I'm going to take you through our analysis on this pair step by step and start to give you kind of future ideas of price direction, where price could be headed next. And I'm going to do this. I'm going to do this on a blank chart, take you from start to finish, how we break down charts. I'll try my best to really kind of go to explain what I'm doing, but as I'm sure you can expect, that there comes a lot of detail into such analysis, and I won't be able to go into full detail on every little thing, but I'll give you the basics and you should start to get a feel for how we determine overall price direction and market sentiment. So to begin with, it's worth noting that we do like to keep charts as clean as possible, and we take a kind of minimalistic approach to this, to our analysis. So instead of using charts laden with indicators left, right and center, which ultimately you end up with kind of trade paralysis. One indicator is pointing one way, another indicator is pointing another way, and it's very rare that all indicators line up. We keep our charts clean, fresh, simple. I mean, this is as much as our as far as our indicators go. We've just got a simple smooth moving average and an exponential moving average, and these, I'll give you a quick introduction to moving averages. They basically they do what they say on the tin. Basically, they are average of price over a set time frame. Now this could be, and by time frame it's each one of these candles, so it can be an 8, it can be 10, it can be whatever you set it as. And the way to trade from this, as you can see, price is riding on top, using this as a dynamic area of support over here, breaks through, and is then using it as resistance. Again, breaks through, support, resistance. As well as that, you can spot crossovers of the moving averages down here. It gives you an indication of which way the markets will be moving. So as you can see, when the blue moving average, the exponential moving average, is above the red one, the market's moving upside, the market's moving bullish. As they cross over here, that would be a buy signal. So you'd enter the market here, ride it up all the way over here. We've broken back through the moving average here. Price moving average is crossed over momentarily, did whip back up, and we're kind of consolidating here. So it's worth noting that this is actually the monthly time frame. So I mean, you've got a big bull run here, big bullish leg. But I mean, if you look at the time scale of this, we're talking the space of about 3 years. So it's very unlikely you would have entered a position here and held it all the way up here. I mean, you would have made some nice pips from that, but you could have just as easily entered a few times, riding it up along the way, profiting as it goes up. So we don't normally enter trades off the monthly time frame, but we use these longer time frames to give us these large time frames to give us kind of an overall idea of what price is doing. So before we even draw any lines on the chart, you can just see from our basic, our clean chart, that price was moving upside, came back for retracement here, but has now made a lower high to this high up here. So we can say that the price is trending. So if we kind of zoom in and look at kind of more recent price action, I mean, this is still, we're looking at the past few years here. We can see we've got a bearish leg here, bullish retracement, and then now we're kind of we're consolidating downwards. And if for those of you who don't know what consolidation is, it's just another word for kind of indecision, for ranging. So what we always start by doing is plotting our key levels, our support and resistance. Now what you want to do here is just trap price in between kind of two price zones, and these are zones that price looks like it struggles to break through either to the downside or to the upside. So you can see here there's multiple times that price has tried to break above this level with these wicks, but there's some sort of resistance along here that's stopping price from moving upside from there. So we can plot our first resistance around this level here. If we put it around here, just like that, and then, like I said, if you trap price, we'll put our second one. So look for a place where price has struggled to break through to the downside. So you see all of these wicks here, rejection, 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 rejection. So that's 4 times that price failed to break through that kind of supportive region there. And we'll just put one more. We'll put it kind of roundabout. If we go by this region here, we'll go around there, so you can see the price has spiked down here, used as support, and is currently around this middle resistance turn support here. And what we do with our key levels is we always back test. So if we go back in time, to further back in the chart, you can see back in 2007, 2008, how price responded to this key level here, touched it, spiked through, and then just melted from that area. So there's obviously some sort of resistance along there, and again here spiked down, back up, and price was kind of holding on this upper level here. As you can see, the spike here to this upper region, and again this lower region here, price has come down to test it and then just fired off upside. So I'm pretty happy with those levels, and we've got to remember that these aren't set levels, these aren't exact levels. So what I like to do sometimes is just draw a little rectangle around this, just to remind us that this is actually a price range. They're not specific level prices, price levels as such. So there we've got our monthly levels there. And we can see the prices, like I said, bearish leg, come back up, broken through moving averages, but it's a little bit choppy around here. Lots of indecision. Didn't know which way it wanted to go. Indecision, indecision, indecision. Finally broke through the moving averages here, to meet this monthly support. Then with the following candlestick, retested the moving averages and melted towards our next level of monthly support, which price rejected, came back up bullish again to our moving averages, which was in confluence in line with moving our monthly major resistance level. Last month did try and spike up, did try and move through this to carry on the bullish engulfing created in April. However, this rejected to close below the moving averages, which are still towards the downside. Now, this current month, it started to move bullish, spiked up, but as you can see, it's already started retracing back down the candlestick. Now, we can't say too much about this current candlestick yet, as it hasn't closed, so we'll need to scale down to the smaller time frames in order to assess this current candlestick. But yeah, so our next step is to to plot our trend lines. So now if you can see, long term, all the way back from kind of 2012, 2013, we've got this uptrend here. So we can plot this like that. You just want to join up the lows, as you can see, from here to here, and we can see we've actually broken through that uptrend. We've come back up to retest. We always look for, when trading trend lines, we always look for a breakout from the trend line, which was here, this candlestick in February's candlestick, and then we always look for the retest, which is here. Price rejected with this spike upwards and closed below, which was also below the moving averages, and now is currently just this final retest. So as we're above this monthly support, could go either way. We need to look down the smaller time frames to see what's happening, like I mentioned. Now, if you're a member of our Telegram group, or if you do in fact follow us on Instagram, you will know that I have been calling this move just here for quite some time, probably since the start of this year, January, February, when I saw this breakout occurring. I did anticipate the price would hold at this level, come back up for a retest, which it has done, and then we are now to assess where price is going now. So as you can see, we've had 1, 2, 3, 4 bounces of this downward trend line. It is possible that we have further consolidation around this point and just tap that trend line again before proceeding downwards. But as I say, overall monthly, it's just to get an overall idea of direction of price. And I mean, I've spent quite long on it today because I really want to explain to you guys in detail what I'm doing. I really want you guys to understand how we trade the markets. So I have spent a much longer time on this monthly time frame than I usually would, but that's not a problem. So next step, we scale down to the weekly, and I just want to say that we always go by length of time frame in terms of how much weight we give to the analysis. So for example, trend lines drawn on the monthly time frame will have will be stronger than, or will have more weighting than a trend line drawn on the weekly or the daily, so on and so forth. just like our key levels, our support and resistance. Our monthly support is, well, should be or is perceived to be stronger than support on the weekly, on the daily. So that's this monthly key level. As you can see, it's held on numerous occasions, week after week after week, breaking over here. So now we're on the weekly time frame. We can plot some more areas of support and resistance. So if we just look at where the market seems to be responding to again, kind of this region here seems quite, yeah, so you can see over here, November last year, price fell from monthly resistance, held, spiked through at this mid-range support, sent back for a retest of the monthly resistance. Some small indecision, well, a few weeks of indecision, that is, before this massive bearish engulfing, which is it's a bearish signal that price will continue downside, and that's just what it did, and that caused the break of the monthly trend line. So we can probably put one more area of weekly support in. We'll put it somewhere around here, probably around there. There we go. You can see, like I said, always back test. You can see price responding to this upper level here, and again this lower level. And as I said, price won't always bounce exactly from our key levels. Sometimes it will go just past, just beyond, because trading's not an exact science, guys. You've got to be adaptable, and you've really got to be ready for slight slippages. As you can see, the spikes through on all occasions. You can't possibly draw a key level or draw a trend line that meets every wick, because you just have millions of lines on your chart. And again, that's what I was talking about earlier about over cluttering your chart. You want to have a nice simple chart, so try and limit it to as few lines as possible. Yeah, keeping it nice and simple. So if we get back to the analysis, where did that downward trend, there we go. If we set this to appear in the weekly time frame as well, there you go, you can see it there, quite nice on the weekly time frame. We've got 1, 2, 3, 4, 5 bounces of this downward trend. You can see this big bearish leg come back up for a bullish retracement, some indecision, consolidation here in between this area of major support and resistance. We're in this for quite some time, probably the best part of it, well, it was about a year. We're in this range, and then after this bounce of the downward trend, we broke through moving averages, which then crossed over in line with the break of weekly support, and that held price down all the way, breaking through that monthly trend line, that monthly uptrend, to this 104 major support region. Following this, we did see a retracement, which is the retest of our monthly uptrend. If we zoom in slightly, see this a little bit better. You can see indecision form this doji candlestick here, indecision at this monthly key level, confirming there is some resistance there. However, price did continue upwards after spiking to our weekly mid-range. We had this big bearish engulfing candlestick. Price continued lower, spiked down, but then retraced all the way back up, sitting just above this area of support. So price did try to carry on moving bearish, but you've got to be wary of a candlestick such as this hammer candlestick, because it does suggest that there is a lot of sell sensitivity around this area, which would be expected as we are sat currently on support. And the moving averages, price is still above the moving averages, which have come up and converged, look as if they're ready to cross over to the upside, which we could potentially see after this big bearish engulfing here last week. This week's candle has now closed. It closed about an hour ago, just over an hour ago. Has rejected there, but this is also rejected that monthly uptrend. So we need to look into this a bit more detail. And what we can actually do here is draw a Fibonacci retracement. And now a Fibonacci, it's another tool we can use to help determine direction, especially on the weekly time frame. It helps to give kind of an overall directional bias on which way the market's moving next. So to put it in simple terms, we start at A, B, C retracement at one of these levels highlighted here. As you can see, it's come in between the 61.8% and the 78.6%, which is also in confluence with the weekly mid-range resistance, rejected this level, and a full retracement, which would be a retracement to the 78.6. We can normally expect a little bit of indecision, so a little bit of ranging, which we are seeing currently at the moment. So yeah, what we would expect after this C retracement is a D leg to the downside to one of these green profit taking regions, which do look to be quite nice target regions in line with the previous trend line bounces over here. We could take any one of these as a target. If we're being more conservative, we'll take the first one here, or even take this minus 27.2% as a kind of target region. But we don't really want to be entering trades off the weekly. Like I say, it's just to get an overall directional bias, and this is suggesting that we are moving. We may see further downside should price hold below these highs here at 111, between 500 and 800. Should we see price close above this 78.6 level, then yeah, we can expect to see further upside. But if we now step down to the daily, right, we can probably plot some more trend lines on now. The weekly and monthly don't really cut it anymore. So as you can tell, we are in an obvious kind of uptrend here, trending up with this bullish leg, bearish retracement. Well, actually, as a matter of fact, we're creating higher highs and lows here. They are very kind of discrete, but you can see, if you see a high there, low there, high, and this is actually the reversal. We've had this rejection, the shooting star rejection off our weekly mid-range resistance, to then come down and create a new low. Instead of a higher low, we've broken this previous low and formed a new low here. So this is definitely something to be wary of, because then we've come back up, formed a high, a new high here, and this is a lower high to this. So you could call this is a trend reversal. So I would say that we're no longer bullish on the dollar yen. The dollar's had some strength for quite some time, but this would suggest that we could start to see some downside on the dollar. If we zoom out a bit, yeah, so we can see obviously again the moving averages crossed over down here, supporting price nicely. Price broke back through the moving averages. Again, have been retesting them as support, retesting the exponential moving average as support, which has now failed, and price is just holding below that. We'd want to see a break of this trend line and potentially a moving average crossover to confirm that we are in fact going short from this region. Again, we can get a Fibonacci on here, take it from the most recent, so the swing high to the swing low. Then there's a C retracement. It's a full retracement. It did spike through the 78.6, but still managed to close below, so our fib remains valid, and we can see it responding quite nicely to our fib, which would leave targets. I'd put targets down at the kind of 108 200 level, and then further targets down at weekly support down here. But if we switch back to the weekly for a second, you can see that it all kind of lines up. So this monthly trend line that we've got there going up, and the retest, it lines up with the 78.6. So with trading Forex and entering positions, it's all about building up confluences, building up I guess that there are reasons to enter the market. So if we see on the weekly time frame, we've got that trend line retest, the bounce from the trend line, scale down to the daily, and we see that that's also a 78.6% retracement, and we've had this lower low, lower high. That would suggest to us that we are moving downside from this region. But once again, from the day, well, on the daily, a matter of fact, we could actually just draw in one level of support just in here. As you can see, price is responding to this on the daily time frame. It's currently sat above it the past 4 days now. With this close, we've struggled to break through that support, and as I said, we may see some sort of consolidation, which we are seeing now. We do want to ideally break this trend line to see our shorts, our move towards the downside confirmed. But if we scale down to the 4 hourly, you'll see this much clearer. So obviously you can see that this uptrend here, I've got to say a low here, higher low, higher high, but this high it did spike higher, but then failed to kind of close above those highs, and then price just kind of melted here to make new lows. Again, this is a lower high, again melted, hasn't quite made its new low yet, but moving averages holding price down. Quite often when we see a break, this is the breakout retest continuation thing that I was talking about. We'll see a break through the moving averages, as we have done here. Price held at daily support there quite nicely, actually came back up to retest the moving averages, which crossed over, and this held as resistance, and now we look to be moving downside. This daily support does seem to be holding up price quite nicely for now, but with all the other factors considered, we could be seeing dollar moving downside. Now, as I said earlier, we have been seeing quite a lot of dollar strength recently. Well, not just recently, for the past few months, really, or the past kind of couple of months. The dollar has been quite strong, but we may be seeing the end of this. The markets seem to be shifting in sentiment, just like the pound. The pound could be picking up strength currently, just as the dollar. This could be a kind of price region that it struggles to break through. Now, that's not to say that it won't go bullish from here, as I'm sure we could plot a bullish fib here, and that would see that price, this C retracement here, it did just tap the 78.6. So we do have to watch this, be careful of this. But as I said, with all of the factors considered, we've got the break of the moving averages, we've got the lower high and the lower low here, and yeah, we do want to break this this 78.6. We want to close below here. That will confirm our lows, and if you can see here, this is actually we can draw, well, matter of fact, that would be the trend line here. We can draw another trend line now from this low here to here. So once we break through this, we can see further downside. Yeah, and so from the H4 4-hourly time frame, short-term targets, we could see 109,500, then be down to kind of 109,200, and then lower. We'll take our targets from our longer time frames. But yeah, it's to assist us with our dollar analysis. We can always look over to the dollar index, which is usually quite a helpful tool in analyzing dollar pairs. Now, the dollar index, it's kind of like an overall measure of how the dollar's doing, of dollar strength or weakness. It helps you to really get a better understanding of market sentiment, of direction. It compares the dollar against a basket of currencies to really kind of let you know what's happening in the market. So here's one I did earlier. This is the dollar index and I mean 2017 wasn't a great year for the dollar. Decline here. Then, like I say, the start of this year has been quite strong. Moving up here, we've hit this resistance region, which has turned to support. Tried to fire off to the next resistive region up here, and we're now retracing. Moving averages converging. So, like I said, on the monthly time frame, we have broken out of this downtrend, but we've kind of fulfilled that first target, which is in line with the bounce of the trend here, and we do look to be reversing. But if we have a little look, so we're not specifically trading the dollar index, but it's just giving us an idea of what price is doing. So we found a double top formation here, and this week is now just closed as a shooting star. Next week we'll confirm that this is a reversal. Obviously we did have the moving averages crossover over here. We'll have to see how price responds to first this major support and then the moving averages. But this candlestick here could prove to be this last week's close could prove to be quite significant if the dollar moves bearish from here. Like I said, the double top formation would see the dollar move downside from here. And again, even on the shorter time frame, we've struggled to break through this resistance, and price closed bearish today's close. So yeah, overall, to me, here we go, even better. 4 hourly, we've broken past the previous lows. Moving averages are crossing over towards the downside. To me, guys, I'd say dollar's looking bearish, or at least beginning to show signs of bearish pressure. And now this is something that I've actually said for quite some time now. If you've been following us on our Telegram, or even if you haven't, I urge you to go over, check our Telegram, just look at our calls, let us know what you think. Really go over, scroll back a few months, and you'll see where I said that I do anticipate the dollar retesting this region before mounting lower. I did call originally around the 101 region, around here, but we'll just have to see if that's possible. Like I said, with trading, you've always got to be adaptable. You've got to change with the market. So I mean, the market could well come down here. At the same time, it could carry on going upside from here, break through this trend line to reach this monthly resistive region. But like I say, we'll just have to wait and find out. But for now, I'm bearish on US dollar, Japanese yen, and you'll just have to tune in to find out more, to find out price targets. Make sure you follow us on Instagram. Make sure you subscribe to our Telegram, and all of our analysis will be posted in there on a daily basis. We'll give out price targets, we'll give out directional bias, as well as other opinions on the market and all the major currency pairs. So yeah, please subscribe to our channel, leave your comments, leave your feedback. We love to hear from you guys, and thanks guys, it's me out.